Jack Ma's statements just, it was valued at $320 billion. That was the rumored IPO price. This is the gamble that you have when you're ultimately operating a business that is beholden to a totalitarian government. CCP and the regulators in China have started to just go down the list in terms of kind of launching antitrust investigations into different tech monopolies. Meituan Dianping is the latest reported recipient of this kind of antitrust scrutiny. Meituan being the Uber Eats competitor, Uber competitor in China. So anyway, they're just going down the laundry list of all the different tech monopolies. China doesn't need to, like Lina Khan at the FTC. I don't know if she's officially in the FTC, but anyway, what Lina Khan is saying is, hey, we, the FTC, we need to be given more powers by the government to be able to properly persecute and go after the tech monopolies. China doesn't have to worry about that. Chinese regulators don't have to worry about that. When the directive comes on down from on high, they go. And that directive has been clearly given. And really, it was Jack Ma who kind of set this all into motion about 6 months ago. And so, and it all started with really kind of Ant Financial, not Alibaba, was the first domino to fall in this kind of series of tech monopoly kind of fallout ever since then. Here is it coming full circle back to Ant Financial, where now what we have reported here is that they could see their valuation sink to as low as $29 billion. Yes, you heard that right. $29 billion. Mind you, this was going to be the biggest IPO in the history of IPOs. This was drawing the interest of every investor, every bank. This was the hottest thing in town. It was valued at $320 billion. That was the rumored IPO price. They never did their IPO. They pulled it last minute because Jack Ma's statements just, right? All that got put on the shelf. And now they're saying it could be anywhere from $29 to $115 billion. So best case scenario, you lost roughly a third of, actually not a third, you lost 2/3 of your value in 6 months period of time because of the statements that he made, which really weren't that bad. There was some truth to them. Certainly, in retrospect, very costly statements, but nowhere near the kind of rhetoric that we have in the United States. Still somewhat, still respectful, but still saying that the regulatory environment in China, the regulators in China were slowing innovation, particularly in the fintech space, but with kind of technology in general. That's pretty much what he said. He went into a little bit more detail than that. We covered it on the show 6 months ago and was kind of surprised that he was saying this stuff in the first place. And then he disappeared for a month for, probably some form of reconditioning. And so anyway, now 6 months later, emerging from the rubble, anywhere from a 2/3 valuation hit to possibly a 90% valuation hit in 6 months' time. This is the gamble that you have when you're ultimately operating a business that is beholden to a totalitarian government. So, if you're on its good side, everything's hunky-dory and rosy. And when you're on its bad side, run for cover. The lesson is made very clear. You want to know who's the biggest monopoly in town in China? The CCP. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.